with more on the market, Stephanie Link, Hightower Advisors Chief Investment Strategist, and she is quite a strategist and a CNBC contributor. Looking at your notes, Stephanie, and you have thoughts here, and I would actually call them deep thoughts, like that Saturday night. I'm doing some cross promotion here, like the Saturday Night Live segment. Some of these are deep. You always, when you come on, first we do macro, then we do micro. So let's do it again. So there are three things that you think the outcome of we now know that might be helpful with the uncertainty problem. What are those?
Yeah, well, look, I think we checked a few boxes last week that were an overhang on the overall market and sentiment. It's the elections, the Fed, and China. And basically, we got answers to all of them. And on the election front, it was a surprise sweep. But now we look forward to a new administration with faster growth, more deregulation, and less government spending. But I think that will be more than offset by higher business investment. Joe, one of the things that I have heard from companies over the last year is that they were holding back on business spend and plans because they just didn't know the outcome. They wanted an outcome. So now they have it. And I think you are going to see stronger business investment. And that bodes very well for corporate earnings. That's what I really care about, right? And by the way, the Trump administration, they're actually inheriting a pretty good economy, running at 2.5% GDP. Inflation is coming down. Of course, we have a big number today, but it's coming down. And you have the consumer remaining pretty resilient. And of course, we talk about this manufacturing renaissance that's happening with regards to AI, data center, power, the grid. That's really helping that part of the economy as well. So we're in good shape. And now we have faster growth ahead of us. And I think that bodes well overall for the overall markets.
I think it would be, I don't know about the economy, you might be right, and I hope AI is such a game changer that it can extend this business cycle even longer. But if we were worried about a slowdown 2 years ago, just because we were due, it's been 2 more years without a slowdown. It's just like night follows day, sooner or later, usually. Maybe it's policy mistakes. Maybe we've conquered the business cycle. But it's been a long time. I worry about that, and I would not want to be an administration coming in at 23 times earnings for a stock market. I don't think the market knew what was going to happen. I think all the liquidity and all the money on the sidelines have helped propel it to where it is, and all the fiscal spending. But for whatever reason, it's richly valued right now, and that's not a good time to take over.
It's richly valued in certain parts of the market, though. So certainly tech has had a heck of a run. There are a lot of expensive stocks within tech. There's also a lot of stocks within tech that are not that expensive. There's financials that are not that expensive. There is industrials where we have this revolution happening with regards to AI. So there are a lot of areas. Oh, by the way, energy. I mean, energy, that sector is trading, anywhere from like 3 to 4 times free cash flow. So there are pockets of the market that I think are attractive. And I think that's why you're seeing a broadening out. We have been seeing a broadening out in other sectors. And maybe, by the way, Joe, maybe it becomes a stock picker's market, which I would love.
Well, that's what we're going to do now. We had those 2 guys. They're not twins, are they? Those brothers, those home improvement.
Oh, they are. The home improvement, the property brothers?
Yeah,
they're
are
twins.
they?
Yeah.
They're bros.
They're brothers. But are they twins?
They're twins. They have another brother who's not a twin, but they're 2.
Well, then it would be a triplet.
Yeah.
But they made such a case for Home Depot yesterday, and then
now you got me double checked.
Then the earnings were good, and it finally looks like it could go to new highs. So.
Yeah, it's had a nice run. It's up about 18% on the year, but I was really surprised that it sold off yesterday. Yeah, they beat on earnings, revenues, EBIT margins were good. Comps were better than expected. They were still down at 1.3%, but the expectation was for negative 3.3%. Whispers were negative 2.5%, and they did get helped out by warm weather as well as the hurricane rebuild, but they are doing much better than they did in the first half of the year, where comps were running down 3.4, 3.5%. And the most important thing that I'm looking at is sales are actually better than inventories. They actually were faster by 2 percentage points, and for the 6th consecutive quarter. So can you even imagine when rates come down and the housing market really takes off, what this company is going to do, the profitability, the operating leverage that they're going to be able to see. So I like this one very much, and I own it. I'll be adding to it on any weakness.
Okay, and we're almost done, but Cisco, and you mentioned a couple others, I think. What is that, Rockwell Collins or something?
Yeah. Well, we can run real quickly through these. I think Cisco reporting tonight, their enterprise spend, we heard from Juniper and Extreme that enterprise networking spend is actually on the rise. So I think that'll be the surprise. We also get security from Cisco that I think is underappreciated. It's trading at 16 times versus 18 times historical. Rockwell's a new name for me. It's about that whole AI data center grid power renaissance and the reshoring, which I think is a $10 trillion opportunity. This stock has not participated. We've talked about Quanta and GE Vernova and Eaton. Those stocks are up 50%. Rockwell is down 10% on the year, and I think their new CFO is going to actually be very good in terms of margin expansion. So I like that one.